Question 1. Which of the following statements about term life insurance policies is not true? A. Term life insurance provides coverage for a specified period and pays a benefit only if the insured dies within that period. B. Level term insurance premiums can increase significantly upon renewal. C. Decreasing term insurance has a death benefit that decreases over the life of the policy. D. Term life insurance does not accumulate cash value. Answer. B. Explanation. Statement A is true as term life insurance is designed to cover a specific time frame and pays out if the insured dies during that period. Statement B is not true. Level term insurance typically maintains the same premium throughout the term, meaning the premium does not increase upon renewal unless it is converted to a new policy. Statement C is true as decreasing term policies are structured to reduce the death benefit over time. Statement D is accurate as term life insurance does not accumulate cash value, differentiating it from whole life or universal life policies. Question 2. Mr. Thompson is considering purchasing a convertible term life insurance policy. He is uncertain about the advantages of such a policy. Which of the following benefits does a convertible term life insurance policy offer that a standard term life policy does not? A. It allows Mr. Thompson to convert his term policy into a whole life policy without providing evidence of insurability. B. It guarantees lower premiums than a standard term life insurance policy throughout the policy term. C. It allows Mr. Thompson to adjust the death benefit amount at any time during the policy term. D. It offers a cash value accumulation feature similar to a whole life insurance policy. Answer. Explanation. Option A is correct as convertible term policies allow the policyholder to convert their term coverage to a permanent policy like whole life without having to prove insurability, which can be beneficial if Mr. Thompson's health changes. Option B is incorrect because convertible policies often have higher premiums than standard term policies to account for the conversion option. Option C is inaccurate as adjusting the death benefit during the term is generally not an option in term policies unless specified. Option D is incorrect because term life insurance, even convertible, does not accumulate cash value. Question 3. Scenario-based MS. Rodriguez recently received a call from her insurance agent indicating that her term life insurance policy is nearing the end of its term. She has been considering her financial situation and wants to ensure that her beneficiaries are protected. What should MS Rodriguez do next? A. Allow the policy to lapse as it is not necessary since her children are now adults. B. Renew her policy, opting for a higher coverage amount and longer term to ensure her beneficiaries are adequately protected. C. Convert her term policy to a permanent life insurance policy without further assessment of her current health status. D. Review her financial situation and evaluate her insurance needs before making a decision about renewal or conversion. Answer. D. Explanation. Option D is the most prudent choice. MS Rodriguez should assess her current financial situation and insurance needs before deciding whether to renew or convert her policy. This evaluation might include considering her current expenses, debts, and any changes in her life circumstances. Option is not advisable since she should have coverage regardless of her children's ages, especially if there are any financial obligations. Option B, while it might provide additional coverage, does not account for the necessity of reviewing her financial needs first. Option C is incorrect because converting a policy typically requires assessing the current health status, especially if her health has changed since purchasing the original term policy. Question 4. When considering underwriting practices for term life insurance, which of the following factors is least likely to be considered by underwriters when determining risk classification? A. The applicant's age and gender. B. The applicant's family medical history. C. The applicant's personal hobbies and interests. D. The applicant's previous claims history with other insurers. Answer. D. Explanation. While previous claims history can be relevant, it is less likely to be a primary factor in determining risk classification for a term life insurance policy compared to the other options. Underwriters typically focus on the applicant's age and gender, option A, as these factors significantly influence mortality risk. Family medical history, option B, is crucial for assessing hereditary health risks, and personal hobbies and interests, option C, are often considered, especially if they include risky activities, e.g., skydiving or rock climbing. Option D may be considered, but it is generally not as impactful on the initial underwriting decision as the other factors listed. Question 5. Which of the following statements regarding the incontestability clause in a term life insurance policy is true? A. It allows the insurer to deny a claim if the insured dies within the first 2 years of the policy for any reason. B. It prevents the insurer from contesting the validity of a policy after it has been in force for a specified period. C. It ensures that premiums will be refunded if the policyholder dies within the contestability period. D. It applies to all claims made under the policy, regardless of the time the policy has been in force. Answer: B. Explanation. Option B is correct. The incontestability clause protects policyholders by prohibiting the insurer from contesting the validity of the policy after it has been in force for a specified period, typically 2 years in most states. This clause ensures that even if there were misstatements in the application, the insurer cannot deny the claim after this period. Option A is incorrect because the insurer can contest claims within the first 2 years for specific reasons, especially if material misrepresentations are found. Option C is incorrect because premiums are not refunded in the event of a death claim during the contestability period. The insurer merely reserves the right to investigate claims. Option D is incorrect because the clause applies only after the specified time frame, allowing the insurer to contest claims within that period. Question 6. Which of the following is not a common rider available in term life insurance policies? A. Waiver of premium rider. B. Accelerated death benefit rider. C. Accidental death benefit rider. D. Guaranteed insurability rider. Answer D. Explanation. Option D is correct. While the guaranteed insurability rider is available in some permanent life insurance policies, it is not commonly offered in term life insurance policies. This rider allows the policyholder to purchase additional coverage at specified intervals without undergoing further medical underwriting, but it is generally associated with permanent products. Options A, B, and C are typical riders found in term life policies. The waiver of premium rider, option A, allows the policyholder to skip premium payments if they become disabled. The accelerated death benefit rider, option B, permits access to death benefits if the insured is diagnosed with a terminal illness. The accidental death benefit rider, option C, provides additional coverage if the insured dies due to an accident. Question 7. Ms. Baker has a decreasing term life insurance policy. What would happen to her death benefit over the life of this policy? A. It remains constant throughout the policy's duration. B. It increases annually based on a predetermined rate. C. It decreases gradually until it reaches zero at the end of the term. D. It is adjusted according to the insured's age each year. Answer C. Explanation. Option C is correct. In a decreasing term life insurance policy, the death benefit gradually decreases over the life of the policy until it reaches zero by the end of the term. This type of insurance is often used to cover specific obligations that diminish over time, such as a mortgage. Option is incorrect because the death benefit does not remain constant and it specifically decreases. Option B is not applicable as the benefit does not increase, it decreases. Option D is incorrect because the death benefit is not adjusted based on the insured's age, rather it follows a predetermined schedule of reduction. Question 8. Which of the following tax implications is accurate for the beneficiaries of a term life insurance policy when the insured passes away? A. The death benefit is subject to income tax for the beneficiary. B. The death benefit is included in the insured's gross estate for estate tax purposes. C. The death benefit is tax-free if the beneficiary is the insured's estate. D. The death benefit may incur capital gains tax. Answer B. Explanation. Option B is correct. The death benefit of a term life insurance policy is included in the insured's gross estate for estate tax purposes, potentially subjecting it to estate taxes if the total estate exceeds federal or state exemption limits. Option A is incorrect because the death benefit is generally not subject to income tax for the beneficiary. Option C is incorrect as the death benefit may not be tax-free if paid to the estate, potentially increasing the estate's tax liability. Option D is incorrect because the death benefit does not incur capital gains tax. It is received by the beneficiary as a death benefit and is not considered capital gain. Question 9. In West Virginia, what is a primary function of the State Insurance Commissioner regarding term life insurance? A. To determine the premiums for all term life insurance policies sold in the state. B. To oversee the licensing of insurance agents and companies operating within the state. C. To set the terms and conditions of each individual insurance policy. D. To directly handle claims made by policyholders. Answer B. Explanation. Option B is correct. The primary function of the State Insurance Commissioner includes overseeing the licensing of insurance agents and companies, ensuring compliance with state insurance laws, and protecting consumer rights. Option is incorrect as the Commissioner does not set premiums. These are determined by insurance companies based on underwriting practices and state regulations. Option C is incorrect since the Commissioner does not dictate the specific terms of individual policies. Instead, they enforce regulations that ensure policies comply with state laws. Option D is incorrect as the Commissioner does not directly handle claims. That is typically the responsibility of the insurance company. Question 10. An insurer denies a claim on the grounds of misrepresentation on the application after the policyholder has held the policy for 3 years. Which of the following is likely to be true regarding this denial? A. The insurer has the right to deny the claim based on any misrepresentation, regardless of the time frame. B. The insurer can only deny the claim if the misrepresentation was material to the underwriting decision. C. The claim must be paid because of the incontestability clause. D. The policyholder can only contest the denial if they have documentation proving no misrepresentation occurred. Answer. B. Explanation. Option B is correct. Under the incontestability clause, insurers cannot deny a claim based on misrepresentation after the policy has been in force for a specified period, usually 2 years. However, if the misrepresentation was material to the underwriting decision, the insurer could contest the claim even after this period. Option A is incorrect as the insurer does not have an unlimited right to deny claims after the incontestability period. Option C is incorrect because the insurer can deny claims based on material misrepresentation even after the policy has been in force for 3 years. Option D is misleading. While documentation can support the policyholder's case, the burden of proof regarding materiality often lies with the insurer when contesting claims. Question 11. Mr. Thompson is considering purchasing a term life insurance policy. He wants to ensure that he has the option to convert his policy to a permanent one in the future without undergoing further medical underwriting. Which type of term life insurance should he select? A. Renewable term life insurance. B. Level term life insurance. C. Convertible term life insurance. D. Decreasing term life insurance. Answer. C. Explanation. Option C is correct. Convertible term life insurance allows the policyholder to convert their term policy into a permanent life insurance policy without undergoing additional medical underwriting. This feature is beneficial for individuals who may develop health issues later on. Option is incorrect because renewable term life insurance allows the policy to be renewed at the end of the term but does not provide the option to convert to a permanent policy. Option B is incorrect as level term life insurance refers to the structure of premiums and benefits but does not inherently include conversion options. Option D is incorrect because decreasing term life insurance typically has a decreasing death benefit and does not usually offer conversion features. Question 12. Which of the following statements about the claims process for term life insurance policies is accurate regarding required documentation? A. Only the death certificate is necessary for filing a claim. B. The beneficiary must provide proof of insurability before the claim can be paid. C. Medical records may be required if the death was due to a pre-existing condition. D. The insurer must pay the claim immediately without documentation if the policy is incontestable. Answer. C. Explanation. Option C is correct. If the death was due to a pre-existing condition, insurers may require medical records as part of the claims process to verify the circumstances surrounding the death. Option A is incorrect because, while the death certificate is typically required, additional documentation e.g. claim forms, policy details may also be necessary. Option B is incorrect because proof of insurability is generally not required for beneficiaries when filing a claim. The insurer should process claims based on the existing policy terms. Option D is incorrect. Even if a policy is incontestable, documentation is usually still required for processing claims. Question 13. Which of the following accurately describes the regulatory role of the West Virginia Insurance Commissioner in relation to consumer protections? A. The Commissioner can set premiums for all life insurance policies sold in the state. B. The Commissioner enforces disclosure requirements to ensure consumers understand policy terms. C. The Commissioner provides direct financial assistance to policyholders in distress. D. The Commissioner decides the validity of claims filed by policyholders. Answer. B. Explanation. Option B is correct. The West Virginia Insurance Commissioner enforces disclosure requirements that protect consumers by ensuring they understand the terms, conditions, and limitations of insurance policies before purchasing. Option is incorrect, as the Commissioner does not have the authority to set premiums, and this responsibility lies with insurance companies. Option C is incorrect. While the Commissioner advocates for consumer protection, they do not provide direct financial assistance to policyholders. Option D is incorrect because the Commissioner does not decide on the validity of claims, and this is determined by the insurer based on the policy terms. Question 14. A policyholder has a level term life insurance policy that has been in force for 5 years. The insured passes away, and the insurer finds discrepancies in the initial application. What is the insurer's likely course of action regarding the claim? A. The claim will be paid in full due to the incontestability clause. B. The insurer can deny the claim if the discrepancies are deemed material to underwriting. C. The insurer must investigate for a minimum of 90 days before making a decision. D. The claim can only be denied if the policyholder misrepresented their health condition. Answer B. Explanation. Option B is correct. The insurer can deny the claim if the discrepancies in the initial application are deemed material to the underwriting decision even after 5 years, unless the discrepancies fall under the protection of the incontestability clause. Option is incorrect because while the incontestability clause generally protects against denial after 2 years, material misrepresentation can still lead to claim denial. Option C is incorrect. There is no mandated minimum investigation period of 90 days before a decision is made. Option D is misleading, and while misrepresentations about health are significant, discrepancies in other areas, e.g., occupation, lifestyle, can also be material. Question 15. Which of the following best describes the nature of premiums for a decreasing term life insurance policy over its duration? A. Premiums increase annually as the death benefit decreases. B. Premiums remain level throughout the policy term. C. Premiums decrease as the death benefit decreases. D. Premiums are based on the insured's age at the time of conversion. Answer B. Explanation. Option B is correct. Premiums for a decreasing term life insurance policy typically remain level throughout the policy term even though the death benefit decreases. This structure allows for predictable premium payments. Option is incorrect because in decreasing term policies, premiums do not increase as benefits decrease. Option C is incorrect as the premiums do not decrease as they remain constant. Option D is incorrect because premiums are based on the original application and underwriting factors, not on age at conversion. Question 16. In West Virginia, if a life insurance policy is terminated before the end of the term, which of the following is true regarding any potential refund of premiums? A. Premiums are fully refunded to the policyholder regardless of the policy type. B. Refunds are not typically issued for term policies since they do not accumulate cash value. C. Partial refunds are issued based on the length of time the policy was in force. D. Refunds can be claimed only if the insured dies during the contestability period. Answer B. Explanation. Option B is correct. Term life insurance policies generally do not accumulate cash value, and therefore, if terminated before the end of the term, premiums are not typically refunded. Option is incorrect. Full refunds are not guaranteed. Option C is misleading as partial refunds are not a standard feature for term policies. Option D is incorrect because refunds are not contingent upon the insured's death during the contestability period, and the policy simply does not offer any return of premium upon cancellation. Question 17. A policyholder in West Virginia has a term life insurance policy with an accidental death benefit rider. If the insured dies from a natural cause, what will likely happen to the claim under this rider? A. The claim will be paid out under the standard death benefit. B. The claim will be denied because the rider only applies to accidental deaths. C. The claim will be paid out under the accidental death benefit but at a reduced rate. D. The claim can only be contested if the cause of death is ambiguous. Answer B. Explanation. Option B is correct. The accidental death benefit rider specifically provides additional coverage in the event of death due to an accident. If the insured dies from a natural cause, the claim will be denied under this rider as it does not apply to non-accidental deaths. Option is misleading, and while the standard death benefit would still apply, the rider's specific benefits would not be available. Option C is incorrect because the accidental death benefit rider does not pay out in cases of natural death. Option D is incorrect because the claim's validity does not depend on the ambiguity of the cause of death when it clearly falls outside the rider's scope. Question 18. Which of the following is a key reason why term life insurance is often more affordable than whole life insurance? A. Term life insurance provides a cash value component. B. Term life insurance has a fixed premium that remains the same for life. C. Term life insurance only provides coverage for a limited time without accumulating value. D. Term life insurance requires a higher initial premium. Answer C. Explanation. Option C is correct. Term life insurance is generally more affordable than whole life insurance because it provides coverage for a limited time and does not accumulate cash value. This lack of cash value is a significant factor in keeping premiums lower. Option A is incorrect. Term life does not provide a cash value component, which is a characteristic of whole life insurance. Option B is misleading. While term policies can have level premiums, they do not last for the policyholder's entire life, unlike whole life policies. Option D is incorrect because term life insurance typically has lower initial premiums compared to whole life insurance. Question 19. Which of the following statements accurately reflects the underwriting considerations for a term life insurance policy? A. Underwriters do not consider the applicant's lifestyle choices, such as smoking. B. Underwriters evaluate the applicant's health history to determine risk classification. C. All applicants for term life insurance are automatically classified as preferred risks. D. H has no bearing on the underwriting process for term life insurance. Answer B. Explanation. Option B is correct. Underwriters evaluate the applicant's health history, among other factors, to determine the appropriate risk classification. This evaluation directly influences the premium and coverage amount. Option is incorrect. Lifestyle choices, such as smoking, are critical factors in determining risk. Option C is incorrect because not all applicants qualify as preferred risks. Classifications depend on individual assessments. Option D is incorrect. Age is a significant factor in underwriting as it influences mortality risk. Question 20. Mrs. Davis is concerned about her ability to pay premiums if she becomes disabled. Which rider should she consider adding to her term life insurance policy to address this concern? A. Accidental death benefit rider. B. Waiver of premium rider. C. Accelerated death benefit rider. D. Disability income rider. Answer B. Explanation. Option B is correct. The waiver of premium rider allows the policyholder to stop paying premiums if they become disabled and unable to work, thereby keeping the policy active without financial strain. Option A is incorrect because the accidental death benefit rider provides additional benefits if the insured dies due to an accident, but does not address premium payments in the event of disability. Option C is incorrect as the accelerated death benefit rider allows policyholders to receive a portion of the death benefit while still living under certain circumstances, such as terminal illness, but does not waive premiums during disability. Option D, while beneficial, may not be the most appropriate choice as a disability income rider provides a monthly income in the event of disability, rather than addressing the immediate concern of premium payments. Question 21. John is considering purchasing a term life insurance policy with a level premium structure. What is one of the main advantages of this type of policy? A. It builds cash value over time. B. The premium amount will decrease as he ages. C. The premium remains constant for the duration of the policy. D. It provides coverage for a lifetime. Answer C. Explanation. Option C is correct. A level premium structure means that the premium remains constant throughout the life of the policy, making budgeting easier for the policyholder. Option is incorrect as term life policies do not build cash value. This feature is typically associated with whole life policies. Option B is incorrect because in a level term policy, the premium does not decrease with age. Option D is misleading. Term policies provide coverage for a specified term only, not for a lifetime. Question 22. Which of the following statements regarding the incontestability clause in a term life insurance policy is true? A. The insurer can contest a claim for any reason within the first 2 years. B. The insurer cannot contest a claim after the policy has been in force for 2 years. C. The incontestability clause is optional and must be requested by the policyholder. D. The clause applies only if the policyholder is under 65 years old. Answer B. Explanation. Option B is correct. The incontestability clause stipulates that after a policy has been in force for 2 years, the insurer cannot contest claims based on misstatements or omissions except in cases of fraud. Option A is incorrect because, while insurers can contest a claim during the first 2 years, they cannot contest it after that period without proper justification. Option C is incorrect as the incontestability clause is a standard provision in most life insurance policies. Option D is also incorrect as the clause applies universally, regardless of the policyholder's age. Question 23. If Mrs. Smith chooses a convertible term policy, what advantage does she gain compared to a standard term policy? A. She can convert the policy to a whole life policy without additional underwriting. B. The premiums are guaranteed to decrease after 5 years. C. She can access the cash value immediately. D. The policy automatically pays a death benefit at age 85. Answer A. Explanation. Option A is correct. A convertible term policy allows the policyholder to convert their term policy into a permanent policy, such as whole life, without undergoing additional underwriting, which can be advantageous if the health declines. Option B is incorrect. Premiums for convertible policies may not necessarily decrease. Option C is misleading. Term policies generally do not accumulate cash value. Option D is false as term life policies do not pay out simply based on reaching a certain age. They only pay upon death during the term. Question 24. Scenario question. Mr. Johnson has purchased a term life insurance policy and is worried about unexpected expenses that may arise if he becomes terminally ill. What provision can he include in his policy to alleviate this concern? A. Accidental death benefit rider. B. Waiver of premium rider. C. Accelerated death benefit rider. D. Term conversion option. Answer C. Explanation. Option C is correct. The accelerated death benefit rider allows the policyholder to access a portion of the death benefit if they are diagnosed with a terminal illness, providing financial support for unexpected expenses. Option A is incorrect. The accidental death benefit rider only provides benefits in the case of death from an accident. Option B is incorrect as it waives premiums but does not provide immediate access to funds. Option D is irrelevant in this context. The term conversion option allows conversion to a permanent policy but does not provide immediate benefits in case of terminal illness. Question 25. Which factor does NOT typically influence the underwriting process for a term life insurance policy? A. The applicant's age. B. The applicant's credit score. C. The applicant's health history. D. The applicant's occupation. Answer B. Explanation. Option B is correct. While an applicant's age, health history, and occupation significantly influence underwriting decisions, credit scores are generally not a factor in determining life insurance premiums or coverage. Option A is incorrect because age is a primary factor in underwriting, as older applicants typically face higher premiums. Option C is also incorrect. A health history is crucial in assessing risk. Option D is incorrect as certain occupations may carry higher risk, affecting premiums. Question 26. Under the West Virginia Insurance Code, what is a requirement for an insurance company regarding the disclosure of policy provisions to a policyholder? A. They must provide a verbal explanation of all provisions at the time of application. B. They must send a copy of the policy to the policyholder upon issuance. C. They must notify the policyholder of any changes in regulations affecting their policy. D. They are not required to provide any disclosures beyond the initial application. Answer B. Explanation. Option B is correct. Under West Virginia law, insurers are required to provide a copy of the policy to the policyholder upon issuance, ensuring they have access to all terms and provisions. Option A is incorrect. While verbal explanations may be helpful, they are not legally required. Option C is not specific to every policyholder. Notification of regulatory changes may not be obligatory for all types of policies. Option D is incorrect as insurers have specific disclosure requirements outlined in the state code. Question 27. Which of the following best describes the concept of face value ECA term life insurance policy? A. The amount paid to the insurer upon policy maturity. B. The total premium amount paid over the life of the policy. C. The amount the beneficiary receives upon the insured's death. D. The cash value that accumulates in the policy. Answer C. Explanation. Option C is correct. The face value of a term life insurance policy is the amount that will be paid to the beneficiary upon the insured's death, assuming the policy is in force. Option is incorrect as term policies do not mature, they expire at the end of the term. Option B is misleading as the total premium is not considered the face value. Option D is also incorrect. Term policies do not accumulate cash value, which is a feature of permanent life insurance. Question 20. What is a common reason for the denial of a claim in term life insurance policies? A. The insured changed their occupation. B. The insured failed to pay premiums on time. C. The insured died from a known pre-existing condition. D. The insured provided incorrect information on the application. Answer D. Explanation. Option D is correct. Providing incorrect information during the application process can lead to claim denial, especially if the information is material to the insurer's risk assessment. Option is incorrect. Changing occupations typically does not affect claims unless the new job increases risk significantly and was not disclosed. Option B, while a possible reason, usually leads to policy cancellation rather than a denial of an enforced claim. Option C is also misleading, and while pre-existing conditions can complicate coverage, claims may still be honored unless the condition was specifically excluded. Question 29. In the context of West Virginia life insurance policies, what does the suicide clause typically entail? The policy pays double the benefit if the insured commits suicide. B. The policy excludes benefits for suicide within the first 2 years. C. The policy cancels automatically if the insured commits suicide. D. The policy will pay a partial benefit if the insured commits suicide. Answer B. Explanation. Option B is correct. The suicide clause often stipulates that if the insured dies by suicide within the first 2 years of the policy, the insurer will not pay the death benefit. And after this period, the full benefit is typically payable. Option is incorrect. Policies do not generally provide double benefits for suicide. Option C is misleading. Policies do not cancel automatically but may limit the benefit. Option D is incorrect, as most policies do not offer partial benefits for suicide. Question 30. Which of the following scenarios would likely result in a higher premium for a term life insurance policy? A. An applicant who is a non-smoker with a healthy lifestyle. B. An applicant with a family history of chronic diseases. C. An applicant who engages in regular physical activity. D. An applicant who is a college graduate. Answer B. Explanation. Option B is correct. A family history of chronic diseases can indicate a higher risk for the insurer, leading to increased premiums. Option A is incorrect. Non-smokers generally receive lower premiums due to low risk. Option C is also incorrect. Regular physical activity is typically seen as a positive factor that may lower premiums. Option D is misleading. While education can correlate with certain lifestyle choices, it does not directly affect underwriting as significantly as health history.